Okay, let's first take a look at the S&P Emini. As I mentioned last week, we had the unwinding of the held short inventory. At this time, you can see the market did unwind that inventory into the trade up to the 1438s area. As it cycled in that area, we did hit that prior level. Since then, we've had both selling, re-unwinding of new selling, and we have had some selling again since then. I'm still looking for a test very soon of this 1427s level. That I don't see as being very strong support. This is kind of the last of the recent buyers in the S&P E-mini, and last inventory into the long side into an extended move tends to be the first inventory out. So we'll see with buy program activity or sell program activity what happens with this kind of last end of the market to the long side inventory. Below that, all the other levels I mentioned last week remain. 1417s will be a key area, as will the 1407s. If we get long liquidation, if these levels start letting go fairly quick, then we may be in a situation where we do get a cash out of those that are heavily long finally start cashing out into the market, unable to make new highs and starting to break down through real support, which is support built from held inventory. And again, we know another very key area is the 1395s. There is a lot of inventory levels holding tied to that 1395s level. Large quantity of held long supply, all tied. So 1395s from an intermediate perspective is the key, really very key level. If we're in a market, maybe a multi-day market where we get a sell-off, and if all the long holders let go of their inventory of 1395s, that will show me that the market has completely lost at least intermediate term confidence that staying long is the right play in this market. So that's where we're sitting at with the S&P E-mini. Now let's take a quick look at the Eurodollar. Now here is the picture in the Eurodollar. And the Eurodollar is currently trading. Last week I was selling into the market pretty much at the 27.95 levels on up. We had just tagged out a level of supply. And what we have here, this is a very substantial amount of short accumulation. Sellers have been selling the Eurodollar pretty much, at least in the CME FX product, in the 25.90s level that held. Market traded up into the 26.20s and 40s. They continued to sell, and they kept getting paid every time they sold. The market would pull back, they would get paid, but portions of these positions remained intact. Market traded up into the 26.40s area again, up towards 26.50s, and we still had a very substantial amount of short inventory. We get the Euro news or Eurozone news, we get a big unwinding, or a fair amount of unwinding into very thin limit activity in the order book. So when you get a lot of market order buying into an order book that's absent or vacant of the typical amount of limit order activity on the offer side, you get very linear upward price movement. Market's been allowed to trade above its former range, and you can see there's still a very substantial amount of inventory still in place. We did hit one level that we neutralized, and at that point we still had over 10,000 contracts, evidence of over 10,000 contracts still short. And that's a lot in the euro. As a result of that and tagging out this level, I was selling 27.95s on up, and I'm actually looking for the 27.40s area as a first target, 26.90s as the next target, and then I would hold runners in any positions that a person still has. News reactionary move with actually a lot of inventory still held. And usually what happens is you might have participants that get long the spot market, so they're very long the spot market in their various funds, but they play the other side of the fence by building and retaining short positions in the CME FX product. So they're accumulating short inventory. This is a very, very common pattern. Seen it now, 7-8 years, as I've tracked inventory literally now for about 9.5 years through this method. So the open interest ratio currently, though, in the euro dollar is we have about 60% of participants holding short inventory and about 40% of participants holding long inventory. Those holding long inventory, they started buying. We had buyers buying the euro. They absorbed the pullback right about to the 2500s area. And you can see here the market has lifted since then. So we do have long inventory holding. Predominance of the long inventory now is holding in the 2560s down to about the 2500 level. So we have two levels of held inventory. Buyers in here held through the pullback, continued to buy. Market has advanced. Obviously, they've been able to profit on portions of those positions, but the 2560s and then the 2500s are the last two levels below us where there's any significant held inventory. See, if we go back many days, there's not any additional levels of long inventory buying points that came into the market that we can see that are lower than our current ones. So this is called the delta volume distributional range. The high range to the low range, that's where all the inventory is in the market, and these are our levels. We're still holding one intermediate level of short inventory held from a much lower price, but these participants have been selling on the way up, adjusting the cost basis of their held position. So at this point I'm looking for some pullback into the range, maybe get a test down into the mid 2700s at a minimum, and what I'll be watching for is that what happens to the market once this delta level comes down and tags out this level. So once we pull back and we get some of these buyers have sold to cover to the point that we take out this level, then I'll see if we bounce or not. It's very common for a market to bounce off neutralization of held inventory levels. So really all the markets do is bounce back and forth between zones of resting inventory, where the large liquidity participants move the market to see who is or is not going to be a weaker hand. So that's where we're at with the euro. Any pushback above this 1.28, we'll call it 20 areas or above, leaves a bunch of those holding short inventory with a decision to make. Do we hold them or do we fold them? So any press above 2820s could result in some additional strength to the upside if we get a bunch of the short inventory starting to unwind or buy to cover. So these are the main areas I'll be watching today, and that is an analysis of the euro dollar.